This new ETF from Roundhill is getting tons of popularity recently, and it's called the WPAY Weekly Universe ETF. If that sounds familiar, it's because it works a lot like the YMAX fund from YieldMax, a fund of funds that pays out weekly. Today, I'll break down how WPAY works, the dividend details we have so far, how Roundhill's other leveraged ETFs have been doing, and my personal plan moving forward with this fund. So, let's dive right into it. Alright, so WPAY is the Weekly Universe ETF from Roundhill. What this fund does is hold all of Roundhill's other weekly pay ETFs inside of it. Basically a fund of funds. Now, Roundhill's approach is a bit different from YieldMax. These ETFs use leverage, which means that they have a higher potential for upside, but at the same time they're going to be more volatile and carry higher downside risk. Later in the video, we'll look at a few examples of how these Roundhill funds have actually performed so you can see the risk reward in action. One of the reasons WPAY is starting to gain traction is because it pays out weekly distributions. According to the schedule, those will likely hit on Wednesdays. On top of that, it's also considered diversified since it holds the entire suite of Roundhill's weekly pay ETFs. So instead of buying each one individually, WPAY gives you kind of a one-stop shop to access them all through a single ticker. And to keep things up to date, the fund will rebalance monthly, which means if Roundhill launches a new weekly pay ETF, it can get added to WPAY pretty quick. Now, the fund is currently trading just above $50 per share, so it'll be interesting to see over the next few months if there's any NAV erosion and how that plays out. When it comes to expenses, WPAY is set at 1.28%, which is a fairly high rate compared to traditional ETFs. However, there's a catch. Roundhill has announced that they'll be waiving all fees until September 30th, 2026, which definitely gives early investors a bit of breathing room. As for the assets under management, at the time of this video, WPAY is sitting a little over $7 million. That's on the smaller side, but remember, this is a brand new fund that's just starting to gain traction. It'll be worth watching to see how the assets under management grow as more investors catch on. Now, as we mentioned earlier, WPAY is a fund of funds, meaning it doesn't hold individual stocks directly. Instead, it owns all of Roundhill's weekly pay ETFs, and these cover a wide range of names: Broadcom, Google, Apple, Amazon, MicroStrategy, Coinbase, and many more. Most of these Roundhill ETFs just launched in 2025, so this is still pretty new territory for investors. But we do have some early performance numbers that give us a glimpse of how they've been doing. First up is AVGW, the Roundhill Broadcom Weekly Pay ETF. Since launching in July, it's up about 14.2% in total return. What's impressive is that the NAV itself climbed from $51.82 per share up to $57.44 while paying out $8.56 in dividends. That's one of the rare cases where both the share price and the income worked in your favor. But the next example using MicroStrategy isn't as green. So we all know MSTY, the YieldMax MicroStrategy ETF that pays monthly. Well, in July, Roundhill launched their own version called MSTW. And remember, Roundhill's strategy is a bit different here. They're using leverage, and you can see how that really impacts performance, as well as paying dividends on a weekly basis. Since July, MSTW has posted about a minus 26% total return, while MSTY held up a bit stronger at minus 16.6%. Both are volatile and risky, but this comparison gives you a picture of the differences between YieldMax's approach and Roundhill's. The last one I'll show here is Coinbase, and for this, we'll compare Roundhill's COIW to YieldMax's CONI. Remember, Roundhill is paying out weekly dividends and using leverage, while YieldMax is structured a bit differently, paying on a monthly basis. This chart looks at the performance from February through to September. Starting with Roundhill's fund, we did see NAV erosion, dropping from about $48.85 per share down to just under $38, which is a loss of about $11 per share. But the fund paid out roughly $14 in dividends, which helped offset those losses. If you had reinvested those dividends back into Roundhill's fund, the total return was actually 10%. If you took those dividends instead as income, you'd still be up, but about 7.3%. Now looking at YieldMax's CONI, the NAV also eroded, dropping about $6 per share in total, which is about a 40% decline. But here, the dividends were much smaller, just $4.10 per share, which was not enough to cover that price drop. The total return with dividends reinvested was 5.36% negative. And if you took those dividends as income, it would have been down slightly more at minus 6.5%. So this is a good example of how Roundhill's leverage and weekly distributions can sometimes help cushion NAV erosion, while YieldMax's approach here left investors a bit underwater despite the payouts. Okay, so now that we've looked at a few examples with Roundhill's other funds, let's take a look back on WPAY. So when are they actually going to start paying dividends? Roundhill has already published the distribution calendar, and the first ex-dividend date will be on September 16th, 2025, with the pay date on September 17th, which lands on a Wednesday. That's pretty interesting because it sets WPAY apart from other weekly ETFs out there. For example, YieldMax's YMAX and ULTY both pay on Fridays, so WPAY is giving investors a midweek cash flow instead. For anyone stacking multiple weekly pay ETFs together, this could actually smooth out your cash flow across the week instead of having everything land on the same day. Alright, now here's how I'm treating this fund. I've actually made my first purchase into WPAY. I put in about $500 US, with an average price of $51.96 per share. And for my Canadian viewers, I actually placed this one inside of my RRSP, so I won't have to deal with any US withholding taxes on dividends this time. This is also my first Roundhill fund, which makes it a bit of an experiment for me. On one hand, I'm a bit excited to see those weekly payouts roll in, but at the same time, I'm definitely cautious given that there's leverage and volatility with these funds. If you're interested in seeing how this position plays out, make sure to subscribe, and I'll be posting an update after I've got at least 1 month's worth of payouts, so you can see exactly how it performs in real time.